What is going on out there, good people? It is your boy Look Around with LMD Trade. Today with another daily trading review. Today, man, today is one of those days I would actually like to have back. It was a green day, but if any of y'all out there are traders, which I'm sure most of y'all are if you're watching these videos, have you ever had we'll start with a red day. Let's say you had a red day, and after you finished that day, you just felt like, man, that was a real good day. Even though it was red, you still did everything that you were supposed to have done. You just ended up with some trades that didn't work in your favor. And at the opposite end of that spectrum, you have a green day. And at the end of that green day, you were like, man, that was horrible. That was one of the most crappiest trading days I done had in a long time. That was my day today. And like I said, if I could have it back, I would love to do it all over again. I'm not sure what it is about Mondays, but I look forward to Mondays. I look forward to Monday morning. I look forward to trading. But then when it comes around, I always seem to have a little anxiety about trading. Like the butterflies when the market opens. And we had that today and took some trades somewhat right off the open that definitely should not have happened. And we pretty much just traded sloppy the entire morning. Right into the charts today. I don't even really want to look at Trader View. Of course, I'll have it pulled up so that we can walk through the trades, but we'll just get right into the review, and you'll probably see exactly what I'm talking about. So I'm gonna go ahead and get the trading station pulled up, and we'll be right back. All right, so we have the trading station pulled up here, and we'll go ahead and get started. We actually took we traded four different stocks today, and we took a total of 7 trades. So we took 7 trades, 4 different stocks, and the first trade that we took was on a stock that I had on my watch list, but it was not a stock that I really wanted to trade this morning. I made a video over the weekend discussing Coinbase. Coin was the stock, and this morning I put it on my watch list with the intentions of just watching it. Make that make sense. On the watch list, and all I want to do is watch it. But we ended up seeing a pattern forming once the market opened, and looked like a pretty good pattern. So instead of just wanting to watch it, now the thought became, let's go ahead and trade it. So let me see here, at 9:39, we ended up getting into coin. And because at the time this pattern was looking so good on the charts, instead of just purchasing one call, which is what we should have been purchasing, we ended up purchasing 2 calls. And if we come over here to the 2-minute chart, we'll take a look at this pattern, and we'll see exactly what I was looking at. So we see coin opened, and it came down and it tested this area, pulled up, and then made a nice run. We got a nice little tiny resting candle, and we ended up getting another resting candle here. And if this candle would have broken the high of that candle, that would have been a nice little 3-bar play. But it didn't break it, so we didn't have a reason to be getting in right there. and we ended up getting in the trade right there. So we were definitely a little premature on the entry, but we got lucky. The next candle ended up breaking the high of these candles here. So that still makes this a valid trade. So we're good at that point. We took a valid trade and it didn't work. Stop should have been right here. Keyword, should have been right there. But because the spread on this was a little more than we like to have on a hard stop, we pretty much were just going to watch this trade and kind of manage it. And as you see, this thing just rolled over, gave up the ghost. So we should have been stopping out on that candle. Look what that candle did. It came right down there to where our stop should have been. And because we had two contracts, instead of taking the $25 loss, we should have just taken a $50 loss. So we're getting greedy. We're getting greedy. We were getting in the trade early. That's already two mistakes there. And then we didn't have our hard stop in. So once this thing rolled and we saw it, now we're just along for the ride. But what ride? We shouldn't be along for no ride. We should be getting out of this thing regardless of what we're going to stop out at. Take your medicine and be done with it. That's not what we did on this thing. So it came down, tested this area, broke it, came down, came back up. Now the floor has become the ceiling. So now it's going to keep bouncing against it until it can get back above it. And we pretty much stayed in this trade until 10:10. Let's see where 10:10 is at. And let's see where we ended up getting out at. We got out on that candle. So we rode this thing all the way down until it tested it to the tune of $270. $270. 10 times our risk. 10 times our risk, people. That is horrible, horrible money management. Horrible, horrible trade management. Say it again. Horrible money management and horrible risk management. And if I could have, I would have slapped myself in the face for taking that trade. But that was our first trade of the morning. So we started off well out of our loss of the day range. We lose 75, we're supposed to be done. But we ended up taking another trade. And the next trade that we took, same stock. This time, we have the bright idea. And we only took one this time, so we were good on that. We took a trade, and you'll see that we kind of cross-trading these. 948. So right there, we get in with one put. Because first of all, this was already in a downtrend from Friday. So if anything, this would have been a real quick pop. Probably would have made the move and then rolled over. But it didn't even make the move. It just gave up the ghost soon as it tested this area and rolled. So we take a put right here. We do have a lower low and a lower high. A lower low. Somewhat of a mediocre high or lower high right there. So we get in right there. And we get out of this trade at 956. Where's 956 at? Right here. Bam. So we're in right here. And we stop out right there. Mind you, when we got in here, wasn't really a good pattern. It hadn't came up here and tested the VWAP yet, which is exactly what it did. It came up, tested the VWAP, but it stopped us out, and then it took off. And that trade cost us $50. So now, first two trades of the day, on a stock that we had on the watch list that we said that we would just be watching. We had no intentions of actually trading. And it has cost us $320. Again, we are well outside of our daily loss. It's like, come on, man, what are you doing? And mind you, if you had watched my video from Friday, I made the comment that I love playing options on the day that they're going to expire because they're so cheap. Well, the opposite of that is the day after they expire and the market is back open is the most expensive day. So we're trading out of a small account. And let's see what we paid for those first two. So the first two contracts, we paid $520 each contract. So we paid $1,000. Turn back around. Those were the calls. Next, we buy one put. And we paid $840 for that put, which we lost $50 on. So we've already used $1,800 of our small account, and we're in the hole $320. Not good. And instead of wrapping it up, we went on and we took another trade, and we left coin alone after that point. But let's look at coin and see what it did. Just looking at it on the 5-minute chart. It came down and it just kind of kept testing the VWAP. And once it broke VWAP, it never looked back. It never looked back. And it made a $21 move. It went from 170 up to 191. Those same contracts that I paid, let's see. Let's take a look at this. Those same contracts that I paid $520 per contract, and we had two of them, closed at $875 today. That move right there. That move right there. And they closed at $875. So what is that? That's $350 per contract. $700. And we lost $270. But we stayed in the market. And the next trade that we took was the SPY. Know that the SPY has been in a terrible state. And we took a put and purchased one put, 949. Let's find that on the chart. We'll see if it was valid. So 949 got in right there. We look at the 2-minute chart. So SPY opened, tested this area, finally broke it. So this here would have been a good spot to get in right there, but we missed that spot. It came down, kind of consolidated again, and we got in early right here. That was an early entry. if we were going to get in here, would have been a, I won't say a good, it would have been a decent entry right there with the stop up here. But we got in here. We have our stop up here. And this one here, we got out at 9:51. We got out in 2 minutes. We were trading on pins and needles today. Got out right there for $25. Made $25 in 2 minutes with that little short move. But this would have pulled back. Would not have, I don't think this would have stopped us out, but you see how close it would have came. That's why they always say kind of give it a little extra room. But that pulled back and then it took off. Nice move. Easily would have hit target. Let's see what that move was from when we got out. We got out at 429. This thing went down to 427. That was $2. So easily would have hit target. Possibly could have rode it down and probably made $100 off of that trade. Had we let it work its way out. Or again, even here, our here was early because we didn't let it come down and pull back and test the VWAP. Here is the optimum entry, because you would have let this come back, test VWAP, and then go. So here would have been where we really would have wanted to get in at. And then we just would have watched it as it came down to this area and seen what it was going to do. If it was showing strong, we let it go. But got nervous, got out, made $25. That was, I don't know how to describe that one. That was just like, I'm just trying to make a little bit of my money back trade. So the next trade that we took was VXX. Now VXX was a swing trade that we took in our other account on Friday. And it was on the watch list, and I was watching it just because of that. Just because it was on, it was a trade that we were watching. It wasn't one that I really was interested in playing options on, but just based on the movement that it was doing, I said, let me see if I can find a pattern. And if we can find a pattern, then we'll look at getting into it. So we got into this one at 9:57. And we always like to see if it was a valid trade. So 9:57. So we see that VAX opened, came up, pulled back. It did what we would like to see it, test the VWAP and then move. But this again was early. This is early because this candle had already broken the low of that candle. So this was early. We got in early. Should have been getting in on the next candle, breaking that candle. But nonetheless, we got in. And this one, we gave some pretty good room on. Gave this one some pretty good room. And we did it for one reason. We bought 2 contracts right there. And then this thing went on and did its thing. And we bought another contract. We didn't sell those 2 contracts. We bought another contract at 10:16, which would have been this candle here. So let's see if that one was valid. So we're in already here. Comes up, kind of pulls back, comes up, kind of pulls back, leaves this wicked bottoming tail. And we buy another contract right here. And this thing comes up to this high. And kind of see that it didn't really have a decent pullback. It just came and the buyers just stepped in. Came up, tested this high here, and then rolled over. But because we were already in the green on this trade, and this one made a little bit of money before it rolled, it gave us a cushion. And we ended up getting out of this trade all 3 contracts at 12.12. We got out of all 3 contracts at 12.12. So right there on that candle, we'll come over here to the 2-minute. And this is where we got out of. Let's see, that was 26.82. It made one more dollar move that we probably could have rolled out to about right there. But on those 3 contracts, we made $156. So we hit target on all 3 contracts. So at that point, we're still in the hole. We're still in the red. And we go back to the SPY. And on the SPY, we buy another put. This put we buy at $9.59. Let's see where $9.59 is. $9.59. We buy a put. Bring this back over. Find $9.59. That's right there on that candle. So we had just sold this one, made $25. This pulled back. And we got in right there with one more contract. And we stopped out on the next candle. Literally on the next candle, we stop out. $29. Because the stop for this would not have been here. It would have been here, which made this not a real valid trade to get into. It was sloppy trading today all the way around. So we lost $29 on that trade, but look at the move that it made. $4.29 down to $4.26. That's $3. $3 move. I'm not sure what the, okay, so, oh, that's the call. Where's the put? It still was 23. I'm sure this number was a little higher when the market was open. But yeah, we lost 29 1 minute at wicked top and tail, pulled back, and then it took off. So it came up, stopped us out, and bam. Thank you for your money, but we about to run. That's what it did. So now that's another losing trade that we add to the losing category. Let's see where we were at. So we was up 175. We'll call that one actually 181. So we would have been down about 160 at this point. And next, we take a trade on the QQQs. The market is in a downtrend at this point in time, as we can see from here. You look at charts today, you'll see everything bounced at noon. Right at noon, everything bounced. But in the morning, we still were in a downtrend, or a downtrend, I'm sorry. But at 10:32, right here, got the bright idea to purchase a call. Like I said, we're in a downtrend. Look around, you know better than this, dude. What the heck are you doing? In a downtrend. On the 5-minute, we're in a downtrend. On the 1 minute, we're in a downtrend. Not even going to look at the 15. Actually, we'll look at the 15. On the 15, we came here and made a green candle. Still no reason to think that this thing is about to start doing this. because everything else is in a downtrend. Go to it, you drill down to a smaller time frame, it's telling you you're in a downtrend. So we purchased that one call. We got out of this at 10:39. We would have been getting out on this candle right here. And we stopped out for a $33 loss. Look at that. That's fairly even. We probably got in this as it was breaking VWAP, thinking it's going to move. But anytime you break VWAP, you want to see it come back, retest it, and then go. Break it, retest it, and then go. Unless it breaks it strong and then comes up here, pulls back, and then goes. Otherwise, you want to see it come up, test it, and then same way it came here, retested it, failed, retested it, failed. So definitely not a valid trade to get into. Definitely not an area to get into. I always say that my online mentor, who doesn't know he's my mentor, he will say, find reasons to not take the trade. Don't find reasons to take the trade. Find reasons not to take the trade. And if you can't find any reasons not to take the trade, then take the trade. This here is showing too many reasons not to take the trade. And we took it. And we paid for it. To the tune of $33. So we come back, and then this was our final trade of the day. And now we were probably about $200 in the hole at this point. We are $200 in the hole. And we come back to the SPY. And on the SPY, we buy the same puts that we had purchased earlier. One that we made $25 off of, and then turned right back around and gave it back plus $5, and we lost 20. This particular one, we purchased one contract in 59. Would have been getting in right there. So we're getting in right here. So we played around over here in this little area. As we said, this would have been a good trade had we had our stop where it was supposed to have been at. We should have been getting in as this broke this candle. We got in late, making our stop be late. Let's look at that. Let's look at that real quick. We were supposed to have gotten in right here as it came down, tested the VWAP, and this candle broke the low of that candle. That would have put our stop up here. We would not have gotten stopped out, and we would have easily hit target plus right here. So that was a bad trade. It was a late trade. Let's say that. It was a late trade. We got in late. Getting in late caused our stop, which was a hard stop, to get triggered. And I will tell you, if I had a soft stop right here, if I didn't have a hard stop in the system, I would have watched this, and I would have taken a bigger stop if this would have came back up and hit me right here. But I would not have gotten out for a $25 or $29 loss right here, because I would have known that this thing needs to go back up to here before it's truly stopping me out. And you see, like I said, this trade actually worked. Just was a bad entry, which led to a bad hard stop. But it came down, came back up, tested VWAP, pulled back, came back up, it broke VWAP, and then it didn't hold. So at that point, we know this thing is heading down for a ride. Buyers couldn't push it up. They've given it every ample opportunity they could. This thing is heading back down, and we're going to ride this thing down and see what we can get out of it. And that's what this that's what this put was right here. Bought this put, and let's see. So it came down, popped back up. Good entry would have been right there. We got in a little late. And again, this candle is not 100% accurate on where we got in on the candlelet. But I'm good with that entry. Stop up here. And we just rode this thing. Look at what it did. Rode it, we rode it, we rode it. And we got out of this one at 12.17. So we'll come over here to the 1 minute because it's easier to drop our arrows. 12.17, which is this candle here. Right there. And we rode it from here all the way down to the bottom. And then let's look at what it did after we got out. It made this was low of the day right here. We just missed the low of the day. You will never get out of a trade at the lowest that it can go. It's so hard if you're going short to get out at the bottom, just like it's so hard to get out of trades at the top. But we did real good with that one. We got out as close as you could, and we made $406 on that trade. $406 on that one contract. We paid $862 for it, and we sold it for $1,268, giving us a P&L on the day of $205 in the green. But if you stuck around this long, nope, I'm not going to ask you to give me a thumbs up right now. That's not where I was going with this. If you stuck around this long, you can see why I say that this was one of those days I want to have back, because the potential in this day was great if we would have traded properly. And we just somehow happened to make it out of this day green when we did just about everything wrong on just about every trade today, except for the last trade. The last trade was a good trade. I pat myself on the back on that one. That one, the entry, the walkthrough process on this one was good. And you can look at it on the 15-minute and you can see it came down, it tested it, and then it broke. And it just came down, and we got out just about at the bottom. 5-minute chart the same way. Came, it tested VWAP, and then it moved. And then, like I said, on these, we're just riding it down. We're just riding it until we get some type of signal that this thing is just about done. And that signal for me was this candle here. And then these candles here. They had good volume in it, but something was telling me like, okay, take your profit. You're up substantially. Go on and get out of this contract. And then you see the next candle. It had some heavy volume. And then this candle here, the low of the day. Let's see. Where are we at? Right there. That's high of the day volume at that time. Just about high of the day volume at that time. So good exit, good strong exit, and good trade. But now's the time I'll tell you. If you haven't hit that like button, please go ahead and hit it for me. Give me a thumbs up. If you're not a sub, please think about joining. Please think about hitting that notification bell and turning on all so that you could be made aware when I do make new videos. I do try to review each of my daily trades at the end of each day. Some days I might be a little delayed on getting it out and it may come out the next day, but red, green, and as RT says, everything in between, I will try to walk through, look at the good trades, take what we can get from it, look at the bad trades, and take what we did wrong and try to push it to the side. And those in between trades, try to figure out what made it an in between. But I'm gonna go ahead, wrap this one up. Actually, I do want to look at one thing real quick. Give me 1 sec. I'm gonna pull Trader View up. All right, we got Trader View pulled up. I just wanted to check one thing real quick. I figured I'd bring y'all along for the ride. So, like I was saying, this was today's debacle. Took 7 trades, 205 closed P&L, and this was the ugliness. Also, in my margin account, I did make, I want to say 250 off of VXX and closed that position today. We got in it Friday, but somewhat, I won't even say that. I was going to say somewhat kind of traded that one scary as well, but we closed green on it, but definitely left some money on the table. Monday was just, for some reason, I don't know if it's because of the way that the market is right now, but look, on edge today for some reason. Trying to come here and see. I thought Monday was a bad trading day for me, but evidently not. Evidently not. 205 of that came today though. We had been up, what's that, 280? We had been just about inside of here on that up until today. Thursdays are the low days. Thursday, we've only made $31 on. But yeah, that's what I was coming along. Just wanted y'all to see that. And like I said, if you are someone that is not using TraderView to track your trades, you may want to think about using it. It is a free service, but I do recommend that you do the monthly service just because it does provide more detailed information. It allows you to dump your trades more frequently. I dump my trades daily. If you don't pay for the paid subscription, I think they only give you 5 dumps a month or something like that. But this is a business. So I look at that as a business expense. Even though I can't write it off, I still look at it as a business expense that's worth it. Because there are expenses that you have in a business that will help you make money, and there are just reoccurring expenses that you have. And I think TraderView is an expense that will help you make money because it will help you see, which I discussed this last week when I looked at TraderView. My best time to trade is 10 o'clock. I need to take this to heart. I really need to take that to heart and not be so anxious to get in trades off the open. We've made $212 trading the open. We've made $1,500 trading between 10 and 11. So this here, we've made that in 30 minutes, trading 9:30 to 10 o'clock. From 10 o'clock to 11, we've made 15. This is my sweet spot. This is my sweet spot, and I need to respect it. I need to respect that as my sweet spot. 11, we've made 262. So these two are running neck and neck. Anything after 11 is garbage. We read anything after 11. Or I'm sorry, I will say anything after 12. Because 11 to 12, we've been decent. But I'm going to go ahead and shut this one on down. Thank y'all for hanging out. And we'll be back in the market tomorrow with a better understanding on what we need to improve on. Y'all have a good day. Peace.